Still on the third part, specific data to look for when analyzing major economies, and we've ended last recording with the chapter 3.1.4, the IBD tip, economic optimism. Just a short review for the economic optimism and what it means. It is a survey of consumers, and the result, so approximately 900 consumers are being surveyed. They are being asked to respond to questions regarding their confidence in the federal economic outlook, then to state their financial situation and so on and so forth. And based on that survey, we have a release, and it is compared with the 50 level. Anything that is about the 50 level should be associated with optimistic levels, and anything that is below the 50 level should be associated with pessimistic level for the US consumer. As you can see on our research here from the past 6 months, from February till July 2013, we are only in the pessimistic territory, so the US consumer is most likely under some kind of stress, not to say pessimism anymore. Moving forward, and on the next chapter we have the challenger job cuts, and this is one interesting indicator. First of all, it is the second tier data. Second tier data meaning volatility is not that high surrounding the challenger job cuts release, but with the exception that we are having quite a drastic change from when comparing the actual result with the estimated one. Now, challenger job cuts, if you really want to know, the challenger name comes from a company. It is a company in the United States. I don't know exactly the name, something like Challenger Gray and Christmas or something like that. But this company deals with payrolls and with level of employment, and the challenger job cuts shows the change in the number of job cuts announced by employers. It is released on a monthly basis. It is released 3 days after the month ends, so 3 days after the month ends, and that makes it for the actual day of release to be a little bit of a random one. But this is the algorithm that makes the release. So on a monthly basis, 3 days after the month end, and it is being released 12:30 GMT during the North American trading session. Now, this one is a percentage-wise indicator in the sense that you are looking at increases from a monthly basis, so from month to month, and these increases should come in percentage-wise indicator. As you can see, for the past 6 months, what we did have here is the challenger job cuts in February was minus 20 something percent. Then we went into the positive territory for March 2013, for April, then negative again May and June, only to rise to more than 40% for July. I wouldn't say that this is a trend. I would say that this is more likely an erratic move for the challenger job cuts. So I would be, let's say, I would leave this chart alone, as we cannot draw a proper conclusion from these challenger job cuts. What remains from the challenger job cuts is that it is a number of job cuts announced by employers, released on a monthly basis, 3 days after the month ends. The release time 12:13 GMT during North American trading session. It is a percentage-wise indicator, and keep in mind, maybe the most important thing is that this is a second tier data, meaning volatility not really affecting trade. Now, moving on with our sixth indicator to analyze the U.S. economy is the ADP non-farm employment change. Now, it might look like the name is a little bit of let's say fancy. I wouldn't say so. The ADP comes from a company as well that deals with payrolls. You'll see that later. And non-farm employment change means the change in the payroll number, excluding the farming jobs, so excluding the farming jobs and the government. Because we are excluding farming jobs and the government, basically these are also being called private payroll numbers. And so these are the payrolls that are being added, the jobs that are being added by the private sector in the United States. Maybe it is more important than the release that shows the government created jobs, but because the private sector is extremely important in the United States, but its main usefulness, if I may say so, its main scope is to offer an educated guess, so offer a clue for traders regarding the all-important NFP, non-farm payroll number that should come and that should be released 2 days later in the United States. Usually the ADP is released on Wednesday, and on the first Wednesday in each month, and then the NFP is released on Friday. So by the time on Wednesday you have the release with the ADP, then the markets can change their forecast regarding the NFP that should come 2 days later. Now, from my experience, the actual result from the ADP may differ in let's say, suggesting a right number for the NFP, even though during times there were 2 or 3 changes in the methodology of this ADP when it is regarding how it is calculated. So this was being made only with the purpose of let's say, having a closer projection between the ADP, so the private payrolls, and the NFP to be released 2 days later. Now stay tuned for the next recording, and we will deal with this ADP in more details, as this is a first year indicator, economic release, and usually high levels of volatility surrounding the ADP, non-farm employment change. Actually, anything that is related with employment brings high levels of volatility, so trading short-term binary options, very short-term binary options, or even trading in the currency markets, you should be aware about this volatility that is implied by the ADP. Now stay tuned for the next recording, please.